Hello everyone. Welcome to revision class series of Financial Accounting 6. I am Miss Akila Pai, Assistant Professor and Head Department of Commerce, Sri Venkatramana Swamy College, Bantwal. Today in this revision class, I am going to revise on the chapter Amalgamation, Absorption and External Reconstruction. In the earlier videos, I have already explained these three chapters in detail, that is amalgamation, absorption and external reconstruction, along with the theory concepts as well as few problems. I'll give the link of those videos in the description box. Please go through those videos. In this revision class, I'm going to just emphasize on the important concept which will appear in the examinations. Now, as I said earlier, amalgamation, absorption and external reconstruction are three different chapters or three different terms. But when you solve the questions, they are all similar in the sense whether it is calculation of purchase consideration or passing the journal entries or preparing the ledger accounts or even preparing the balance sheet. In all the three cases, same method has to be followed. Okay, so once you learn one set of journal entries and understand how to calculate the purchase consideration, you can attempt the questions of all the three chapters without any difficulty. So now first let us take up the theory concept. The first important theory concept here is define the terms amalgamation, absorption and external reconstruction. This question had appeared in the year 2015 for 6 marks. Once again here let us analyze what is the meaning of the term amalgamation, absorption and external reconstruction. Coming to the first term, that is amalgamation. Amalgamation is the process of blending of two or more existing companies into one undertaking, which means that if there are two existing companies which are into the similar line of business, then those two companies will be amalgamated and form a new company. That new company will take over the business of those two existing companies. So in the process of amalgamation, those two existing companies will be liquidated and their business will be taken up by that new company. Okay, so that is how amalgamation take place. The existing companies will be liquidated and they come together or blend together to form a new company. The shareholders of each amalgamated company become substantially the shareholders of new company, which means that the shareholders of two existing companies, since it is going to be liquidated, they will continue as the shareholders in the new company. Okay, so this is the meaning of amalgamation. Then coming to the second term, that is absorption. Absorption is the process under which an existing large company purchases or absorbs the business of another small company or companies doing similar business. So in case of absorption, what happens is that there will be two companies, one which is a large company and the second one which is a smaller company. Here, the larger company will absorb or take over the business of smaller company. So both will be in the similar business. So here the larger company is absorbing the business of small company. So that is the case of absorption. Then the third terminology is external reconstruction. External reconstruction refers to liquidation of existing company for the purpose of forming a new company which will take over the business of liquidated company. So here there will be one existing company which is going to be liquidated and they themselves will form a new company and that new company will take over the business of this one existing company. Okay, so these are the meaning of amalgamation, absorption and external reconstruction. When you see a question in the examination, you should be able to identify whether the problem belongs to the chapter amalgamation or absorption or external reconstruction. Now, how to identify that? As I said, amalgamation means there will be two existing companies and the new company will be formed which will take over the business of those two existing companies. If you're given the information or the balance sheet of two existing companies and in the adjustment it will be stated that a new company will be formed to take over the business of those two existing company, then it is a case of amalgamation. Okay, so coming to the second concept, that is absorption. In the exam they will give you the information about two companies and here they will state that one existing company is going to take over the business or absorb the business of another company. So you should be able to identify that problem belongs to absorption. Okay, Then the last concept is external reconstruction. They'll give you the information about only one company and they will state that the new company will be formed to take over the business of this existing company. So it will be a case of external reconstruction. Okay. So from the chapter of amalgamation, you will definitely have one question for 24 marks and also from external reconstruction. Usually from the absorption chapter, a question will appear for 12 marks. Okay. Now let us take up the next concept, that is what is purchase consideration, and briefly explain different methods of calculating purchase consideration. This is very important because it is appearing repeatedly in the year 2013, 2018 and 2019. So in all these 3 years, this question had appeared for 6 marks. So please concentrate on this question. So here, first you need to write what is the meaning of the term purchase consideration, and then you have to write what are the different modes of calculating purchase consideration. Now coming to the meaning of purchase consideration is the price payable by the purchasing company to the selling company, which is also called vendor company. Okay, it is the price or the consideration which has to be paid by the purchasing company to the selling company. That is called purchase consideration. It can be paid in the form of cash or in the form of shares or even in the form of other assets. Let us go back to the previous slide and identify who has to pay the purchase consideration to whom in all the 3 cases. Okay. Now coming to the case of amalgamation, as I said, there will be 2 existing companies which are going to be liquidated and new company will be formed. So here those 2 existing companies will be called as a selling companies and the new company will be called as purchasing company. Okay, so now the purchasing company, that is a new company, has to pay the purchase consideration to both the selling companies. Okay, that is in case of amalgamation. Then in case of absorption, the larger company is absorbing the business of smaller company. So the larger company is the purchasing company and smaller company is the vendor company or selling company. So here the larger company has to pay the purchase consideration to the smaller company. Okay, in the last case, that is external reconstruction, the one existing company is going to be liquidated and they will form a new company. So here the new company is considered to be the purchasing company and the existing company which is going to be liquidated is called selling company. So here the new company has to make the payment of purchase consideration to the existing company. Okay, I hope you understood the meaning of purchase consideration. Then let us see what are the various methods of calculating purchase consideration. There are 4 methods of calculating purchase consideration. The first method is lump sum method, second one intrinsic worth method, third one net assets method, and last one net payment method. Now coming to the first one, that is lump sum method. Here the lump sum amount of purchase consideration will be specifically stated in the question. So there is no requirement for further calculation. So whatever the lump sum amount stated in the question, that itself has to be considered as the purchase consideration. Okay, that is under first method. Then coming to the second method, that is intrinsic worth method. Under this method, the purchase consideration will be calculated on the basis of intrinsic value or intrinsic worth of the share. So now what is the meaning of intrinsic value? Intrinsic value is equal to net assets available to the shareholders divided by number of shares. So based on this intrinsic value, we have to calculate the purchase consideration. But when we solve the problems, this method of calculation of purchase consideration is not used. Okay, so we use another 3 methods to calculate the purchase consideration. Let us take up the third method, that is net assets method. Here the net assets itself is considered to be the purchase consideration. Now how to calculate net assets? Net assets is equal to total agreed values of all the assets taken over minus total agreed values of all the liabilities taken over. So difference between these two terms is called net assets. Okay, so net assets itself is considered to be purchase consideration in the third method. Then going to the last method, that is net payment method. Under net payment method, as I said in the meaning, the purchase consideration can be paid in the form of cash or in the form of shares or even in the form of assets. Okay, in the question, if you are given the information specifically about all the methods of making the payment, that is in the form of cash how much is given and how many shares are issued of how much face value or any other assets given. So if when you add all those items, you will get the total, and that total is called net payment method. So under the net payment method, the purchase consideration will be equal to cash received plus value of shares received plus value of any other assets received. Okay, this is how we calculate the purchase consideration under fourth method, that is net payment method. So this is the second important theory concept which you have to concentrate for the examination. Then let us take up one simple question which was asked for 6 marks. Here we need to just calculate what is the purchase consideration. Okay, it had appeared in the year 2019 for 6 marks. Let us see the informations given in the question. Sonu Limited agreed to take over the business of Mona Limited. The balance sheet of Mona Limited as on December 31st, 2018 is as follows. Okay, now seeing the sentence, you can make out this question belongs to which of the three cases, whether it is amalgamation or absorption or external reconstruction. Here it is given that Sonu Limited agreed to take over the business of Mona Limited, which means that these two companies are existing companies. So one company is absorbing the business or taking over the business of other company. Okay, it is a case of absorption. The balance sheet of Mona Limited as on December 31st, 2018 they have given. On the asset side, we find goodwill 1 lakh, land and building 6,40,000, stock 1,68,000, data 36,000, bank balance 56,000. On the liability side, we have 5% preference shares of rupees 10 each 3 lakh, equity shares of rupees 10 each 3 lakh, profit and loss account 1,10,000, 6% debentures 1 lakh, creditors 20,000. Then it is given that purchase consideration is calculated as follows. Below that first one, equity shares are to be redeemed at 6% premium by issuing equity shares in Sonu Limited. And the second one, 9 preference shares in Sonu Limited are to be issued for every 5 preference shares in Mona Limited. The face value of preference shares issued is rupees 10 each. Calculate the purchase consideration. Okay, so when you find this kind of question, your work is to first identify which method of purchase consideration has to be followed here. Okay, as I said while explaining in the previous slide, the purchase consideration can be calculated mainly in three methods, that is lump sum method. Lump sum method you can follow when the lump sum amount is given in the question, but here they have not given any lump sum amount. Then the next one is the net assets method. In order to calculate the purchase consideration under net assets method, they should give you what are the agreed values of assets taken over and liabilities taken over. But in this question, they have not given that. So here, which is the last method that is left out? Net payment method. So here you have to follow net payment method to calculate the purchase consideration. Here, the first point says equity shares are to be redeemed at 6% premium by issuing equity shares in Sonu Limited. Okay, that is how the equity shares are issued to discharge the purchase consideration. So here in the working note you have to show in the form of equity shares how they are making the payment. If you see the liability side, the total amount of equity share capital we have is 3 lakh. Okay, on that if you calculate 6%, you get 18,000. So what is the total value of equity shares given to them? 3 lakh plus 18,000 premium. It comes to 3 lakh 18,000. So 3 lakh 18,000 value of equity shares are given. Okay, then the second way of discharging the purchase consideration is 9 preference shares in Sonu Limited are to be issued for every 5 preference shares in Mona Limited. Okay, here you have to do the cross multiplication. It is stated that for every 5 preference shares in Mona Limited, they are going to issue 9 preference shares in the new company. Okay, 1 minute. For every 5 preference shares, they are going to issue 9 shares. We have to identify what is the number of preference shares we have right now. Here the total amount is 3 lakh divided by 10. What is the number of shares we get? 30,000. Okay, so now you have to calculate if 9 shares are given for 5 shares, what is the number of shares that will be allotted for 30,000 shares? Okay, you get 54,000. Then it has to be multiplied with the face value, that is 10 rupees. So the total amount of preference shares given would be 5,40,000. So when you add the amount received in the form of, the value of equity received and the value of preference shares received, you will get the total purchase consideration. So here 3,18,000 plus 5,40,000, you get 8,58,000. So that is the purchase consideration payable by Sonu Limited to Mona Limited. Okay, this is how you have to calculate the purchase consideration. Very small calculation which will come for 6 marks. Okay, please look for similar question in the question bank and also in the textbook. If you find any difficulty in understanding, please contact me. Thank you for watching.